housing data out this morning. Meanwhile, housing starts were down 2.8%. Building permits were up 4.8%. Economists had predicted both would rise. I'm joined right now by Jeff Taylor. He's Digital Risk Managing Partner and more on what this means for the housing recovery. Good morning to you.
Good morning.
How would you characterize housing right now?
You know, housing right now, I think, is depending on it's two parts of the world, a country. I mean, basically in certain areas where you have the jobs, you have it growing very, very quickly. The rest of America, I think we're starting to stable and rise a little bit. But what hit me today in the numbers was the housing permits. We hit a 6-year high today. And what that tells me fundamentally is we have that sort of construction conveyor belt, labor, concrete, different parts is catching up with some demand.
So you're saying that this is a good indicator of the future? I
think it is. And I think if you tie that into some numbers that came out later this month in the jobs report, where that 25 to 34-year-old age demographic actually had the highest jump in 6 years, again, employment jobs, I think that's a very, very good indicator for the first-time home buyer.
As interest rates move higher, does that act as a positive or negative? I mean, when we saw mortgage rates move up, it did close off the market a bit. It made it harder for people to actually take out a mortgage. Is that what we're looking at going forward, or is this actually going to be a positive, encouraging banks to lend?
You know what? I actually think it's going to be a positive. It might be a little bit counterintuitive, but right now I think banks have basically sort of dug their heels in the sand and saying, listen, in
they
this
can't
rate
make any money on these rates.
Well, exactly, and they're going, look, for the perfect borrower, fine, but it's going to take an increase in mortgage and interest rates to actually get them, I think, to look at the good borrower, really to assess risk a little bit differently. But the key, whether it be a perfect borrower or good borrower, is manufacturing loan quality. We have to make sure that we manufacture mortgage loans good and don't have the issues we had in the past.
Is it a seller's market or a buyer's market right now?
I'll tell you what, in places like Miami, New York, San Francisco, it's definitely a seller's market. And I think nationally right now, in other areas, it's sort of a mixed bag. Again, depends where you have that job creation.
So you really want to be, if you're considering putting your house on the market, do it now because prices are up there now.
I would definitely take a look at it.
Do they come down in 2015?
I think we're going to see them. I think we're going to see them stabilize. I don't think they're going to come down because I think you still have a lot of pent-up demand in different areas. And as new construction comes in, I think we're going to see them stable. But again, it really comes back to the specific parts of the country you're looking at.
Jeff, good to see you.
Good to see you.
Thank you so much. Jeff Taylor joining us on housing. Next.